top pick number one, Amazon.com.
Yeah, so Amazon was a stock everyone wanted to own from 2014 till 2020. Obviously, what's happened since then is they had some oversupply in their retail division, and then more recently we've seen, and with Microsoft's results last night, the cloud computing business that was chugging along is starting to slow with the macro weakness and what we've seen in the tech sector. But right now, when we look at Amazon, we can buy it at a decade-low multiple. It's at 14 times EBITDA. Hasn't traded anywhere near that over the last 10 years.
Wow, decade low.
Decade low, yeah. And at a time when all these headwinds we think are going to start reversing into tailwinds over the next 12 to 18 months. And so on the retail side, Jeff Bezos' last act was to double the fulfillment capacity for Amazon, and then he sailed off into the sunset. Mm-hmm. And the new CEO has been left clean that up because they built or committed to too much warehouse space. We saw the rollover in all durable goods and coming off the pandemic. And so now they've been rolling that back, and we're coming up on sort of that 1 year mark when they really started to get impacted by that drop in spending on durable goods. And so they're going to start to lap that. At the same time, they've made huge progress on consolidating that footprint. And now we're actually, as Shopify, as an example, the stock's starting to pick up. We're seeing e-commerce activity pick up back to its historical growth rate. So we have this confluence of factors in the retail side that's going to improve the margins and show that Amazon can take a lot of market share over the next 2-3 years. And that's going to drive big cash flow. And on the cloud computing side, the second point, it is going through a little bit of a slowdown now, but we still think, and to use a baseball analogy, it's probably in the third or fourth inning of the total transition of cloud computing. Mm-hmm. There's still much more innovation that's going to happen. And I mean, AI being in the news recently, Amazon's going to take its share of that type of work and benefit from that. So there's going to be a reacceleration of AWS revenue growth, we think, in 2024. And at that time, we think Amazon will be a stock everyone wants to own again, like 3 years ago.
Okay. Raytheon Technologies, of course, we think of them as a big defense contractor, but they also have a big civil aviation business.
Yeah, so Raytheon, they merged with United Technologies aerospace division, I think it's 2018, 2019 timeframe. And then we haven't really seen the fruits of that merger bear out, because right after that, then when there was the COVID lockdowns and collapse in aerospace activity globally. And so now we're starting to see that pick up. So there's two sides to the aerospace. One is their Pratt & Whitney engine division, so they make and service the engines that go onto the Airbus, A321neo plane, which is the best-selling plane out there right now. As well, they work on the Boeing planes as well. So as these two companies ramp up their new aircraft deliveries, you're going to see Raytheon increase their sales to those two companies. And then just general aviation obviously causes maintenance wear and tear on planes, and their Collins Aerospace division benefits from an increase in that in terms of aftermarket sales. And then, the defense, it's going to be a steady, slow growth kind of buffer that just provides nice cash flow. And so we think Raytheon can grow its earnings per share close to 20% over the next 3 or 4 years, and it's trading at a 20 PE ratio. So we think it's a lower risk play on the industrial side to see some growth, and we think it'll do well.
And then finally, Whitecap Resources. This would be among your favorite energy names?
Yeah, so Whitecap is a name that one of the few names we hold in both our global growth and our income growth. Of course, it qualifies with a 5.5% yield, and that yield's going to grow significantly once they reach their debt target this June. And I know the energy trade has been popular amongst the Canadian investors in the last year, and I think the viewers are probably familiar with the general theme that energy prices are higher, companies are much more disciplined, they're focused on shareholder returns. One thing we actually like about Whitecap versus some other companies, and why we own Whitecap, is we've seen a time where we think management teams have almost gone too far back to the shareholder returns, just pay down debt, pay dividends. Whitecap's investing still in the company to grow.
Okay.
They did a big acquisition of XTO Canada in the summer. And even though, they're obviously the top bidder for that asset since they won the bidding, we don't think it was, when you're out with a bunch of gun-shy energy companies,
Yeah.
And, there's a chance to acquire what we think is a prime jewel MVP type asset. Whitecap's the one that stepped up and did it. And, within a year, they'll have hit their debt target. They'll have paid down a lot of the debt they took on to do that acquisition. And we think that's going to be the playbook they're going to use to create value over the next 3, 4, 5 years. And so in a world where we're not seeing a commodity, maybe super cycle, we're not in the oil to 150 camp, but if oil stays at 80, 90, $100 for the next 3 to 5 years, there's going to be a lot of value we think management teams can add by layering in these type of acquisitions and managing the balance sheet appropriately.
That's interesting. Yeah, bidding on assets when other companies are reluctant to be seen to be spending heavily could get you a decent deal. Yeah, exactly.
And for the same reason that a lot of the viewers look at an energy company when Whitecap buys an asset, they're seeing the same thing. They're seeing lots of free cash flow this asset's going to generate for our shareholders, and they get the added benefit of they can use their balance sheet and lever it up a little bit, and as long as they stay within their range, they'll be good. And the last thing, the CEO has been out there in the market buying shares consistently over the last year. Okay. So it's not huge dollar amounts, but it's always, we like to see management teams put their money where their mouth is.